Hello and welcome to another edition of Real Talk. There's a lot to cover today, so we'll keep it nice and pacey. So let's start with real estate. Nick and I have just done some figures recently on the growth over the last 20 years of Melbourne versus Sydney, which is really astounding. Melbourne actually has come out as the top growth state for Australia. For the last 20 years, we've had the property market has gone up 4 times. And when you actually analyse the statistics and the figures, we've actually gone up 7.7% year in, year out. I mean, clearly we haven't. We've had dips and highs and lows, etc. But in comparison to Sydney, who've actually had 6% growth. So even though you've got 6.6 versus 7.7, it's quite a gap. So you can see why Melbourne is actually is overtaking Sydney in the long term. So that's great news. 1,115 properties went to auction on the weekend with a 68.9% clearance rate, just a smidge under 70%, but of course they had about 2/3 more properties go to market. So there's certainly no slowing there. What we are seeing is an easing off in the investor space, and I guess at the end of the day that's the tipping point between the government trying to slow the market. They're finding it impossible to slow the home buyers because there's such need there, the downsizers, the new home buyers, and people just changing one home for another. It's such a massive sector of the market. But the investor space, they're putting a lot of cold water on at the moment. They're attacking us with stamp duty, with the banks, and just the general media. And you know, it's really interesting because one thing I have learned in business over the years, and I've been in business for 35 years, self-employed for that whole time, one of the things I have learned is that the tipping point is quite fragile. You know, when you've got a lot of negative press out there, you've got to be really careful because optimism is learnt behaviour. And if you actually don't encourage optimism, then you can sometimes tip into a market that's a little bit unforeseen. And I know some of the industry leaders have come out saying there's too much change too quickly. And because for a couple of weeks the governments didn't see the brakes going on, they just kept implementing more and more. So I think that's something we've got to be really careful of moving forward. But the equity markets have been up, and the interest rates around the globe have been very, very positive. In fact, the US have just come out with the highest growth in the last 12 months, more growth than they've had in the last 16 years. And employment is the best it's been in the last 16 years. Clearly, they've got a lot of social issues at the moment, but in terms of being able to put up their own interest rates, they've just put interest rates up for the 4th time. And I guess that leads me to talk about our economy as well. We've actually now just ticked over 103 consecutive quarters of growth, which means that we are now the world leaders. We've actually set a new world record. The Netherlands held it previously. We now are the strongest economy quarter in, quarter out of growth. So let's hope we can continue to hold that. There's a lot of talk about the new world, and I've been doing some delving into that because as those who follow my blog on a regular basis know, I've been talking about the difference of going from our communities, our villages, to our areas, the state-based, national-based. Of course, now it's very much a global economy. So there's a lot of reshuffling of what were traditional benchmarks and how we actually measured growth and performance. So in what is being referred to as the new world, a lot of traditional trends are being broken. We're being challenged with those. We're trying to understand the way forward and what the new mediums for benchmarks are. For example, employment has changed so dramatically. In the past, employment really constituted a 35 to 40-hour week. Well, employment these days, there's more part-time employers than ever before. There's so many different competing priorities, but more importantly, one of the biggest changes in trends is we've seen growth in business and growth in the economy in that spurred from that, but we've actually not seen growth in inflation. Now that's very out of character. And what I put it down to is the fact that people are being so conservative about their expenses. I know in business, you have to, everything going out has to be accounted for, and what's coming in has to be forecast. So I just think wages haven't grown, for example, because they're just being captured as a normal business expense and being harnessed. And that gets back to optimism again. So it's that level of mood and the lack of optimism out there that we've got to be really careful of. So I think generally speaking, we've got a really healthy market. We've got good equity markets. Superannuation is the fastest growing sector in Australia at the moment. So that's got to be fantastic in terms of people planning for the first time. The real estate market is still very, very, very strong, and I guess redefining a lot of boundaries that are really pushing us. And I think the biggest change for us here at Solid is that finding an apartment for under 500,000 has become challenging. Finding a 2 or 3 bedroom under sort of 650, 700 is challenging. We're seeing a lot more people moving further out, away from perhaps the areas where there's a lot of transport and amenity, to get the price point, but the rent's not quite there. So I'll close on that note. As investors, we must always be prudent in our selection of our asset, whether it's a share that you're buying, whether it's putting into superannuation, putting it into property. We really have to have our formulas, we have to have our tick balances. And if you're looking at property, wherever you are looking, always work backwards. Who is your tenant going to be? Because the more money your tenant pays you in rent, the less money you're going to be out of pocket. And good note to close on, out of pockets. It's nearly tax time. So next week I'm going to have Amanda and Noel from MK Tax join us and help us get race ready for tax time. More money back into our pockets, hopefully. I'll close on that note, and thank you to everyone who phoned me about my new haircut. Take care. Bye-bye.